Okay, so the pair that we're going to be going over is CAD JPY, right? I executed two buys from around this area here for a total of about 70 pips between the both of them, right? Keep in mind this is a counter trend trade, meaning that we're going against the trade, which is a lot riskier than going with the trade. So, going into market open, I noticed that price had gapped. Over the weekend, banks, big institutions, right? They can shift price. They're still trading. We don't have access to the market, but they do, right? So that means going into Sunday, 5 p.m., we could be seeing a gap on most pairs um, because of their activity, right? So what price likes to do when it gaps is really come in and test these levels, right? It's going to want to test these levels to see if it's real or not. So keeping that in mind, I already had an overall bias, buying bias, right? We noticed that on the 1 hour, we started to see liquidity zones being formed, right? Areas with a lot of wicks in them. People that are trading, right, and they execute from within these zones, most likely have their stop losses somewhere within these zones as well, right? Once they start going into profits, they start moving their stop losses up, creating this zone that is most likely to be taken out before it actually goes in. So the reason it takes it out is because it wants to grab momentum, right? If people are actually here and they're buying, when price dips below and hits their stop loss, they become sellers. So when they become sellers, that creates an abundance, more supply for buyers to come in and step up and actually drive price up. So very often before price can actually make a move up, it needs to create, right? Banks need to create more sellers in the market so that people have, buyers can actually buy those sells, right? So once we saw this area of liquidity being created, we wanted to wait for price to actually dip below. Once price dipped below, that's when I started to focus into this area here for my entries, right? So this was an area that I was looking out for to be taken out. I'll change the color here. Right? So this was the area that needed to be taken out. Once it was taken out, I can start looking into this area here for that spring opportunity, right? So we're going to go ahead and dive into the smaller time frame, 30 minutes, um, and see the type of price action that we can find there. Awesome. So now that price has been taken out, we can actually dive even deeper, which for my entries, I went into the 1 minute, right? I'm going to go ahead and go into the 5 minute first to show the schematic that I was looking for. Bear with me if it takes a little bit. There we go. Okay. Again, now what are we seeing on the 5 minute? So once we actually have that push downward, we start noticing that price is being rejected and also creates liquidity as well. Not only that, we have equal lows that need to be taken out. Right? People are buying here, they have their stop loss real close. They need to be taken out to create even more momentum, right? So what I did now was going to the 1 minute, and the 1 minute is where I'm gonna actually take my entry because I'll be able to see a very clear point of interest, right? Where is price really trying to come back to before it takes off? And this may take a little while to get there. Okay. Now that we're in the 1 minute, I can identify these points of interest here. We have this first one, right, where banks they sold to buy, and then we also have the second one here. I can then, once I see this, set a limit a buy limit right at this area here, because I know that this, once banks are going to want to break even at this level here, and that's going to be the area where I'm most likely going to see that shoot up, right? So I set a limit there as well. And we also have this one here as well. Right, so once I executed this buy here, my risk management, right, my stop loss, I know for a fact has to be below here, which tends to be, it was a 4 pip stop loss, right? 4 pips. I've now shrunk down my stop loss from the 1 hour all the way down to the 1 minute, right? So I know that if once price came back down, cleared out everything here, tapped into this level, it could potentially start going up. So from there, if I have 2 trades going, that becomes an 8 pip stop loss. Right, my account is 10K because that's my profit target. I'm willing to risk %10. Right, that was a percentage that I felt comfortable risking. Right, with this challenge, you are timed, right? So you have a limited amount of days to actually complete it. So that means that I may have to risk more and just be a lot more accurate with my trade setups. So 10%, which means that I'm willing to risk amount. My risk amount is 1,000. So that means I'm able to actually, my stop loss could be up to 10 pips. In this case, it's only 8 pips off of 2 trades. So 8 pips. Well, I could just do 1,000 divided by 8 pips. Actually, I could just explain it this way easier. All right, so 8 pips times 100 per pip equals $800. I am still $200 below my max threshold. So I'm okay with that. If I was to lose off this trade, that means I'm only losing 8 pips, which is 8%, not 10%. I'm okay with that, right? My risk reward was extremely phenomenal because I am risking only 8 pips to gain about, and I believe I took profits up here. Right, so I was shooting for 40 pips. That is a 10 to 1. My risk reward is a 10 to 1. I'm taking that trade. Right. Keep in mind it is a counter trend trade, right? So sellers could have came in at any moment, right? You know, we did see this pull back here, but by then I had already secured my profits. My stop loss was well above my break even, and I was going to walk away with profits no matter what, right? So this trade setup right here just expedited, maybe even 3 weeks of my trading that I would have had to do. So I'm very content with this trade here. That's my overall breakdown. It was very simple, very easy setup. You just had to be able to identify the schematics, right? And be able to set a really good entry point and good risk management, right? So these are the type of trades that we're going to continue to be taking, right? These high risk reward trades, and be able to just capitalize off risk reward rather than the amount of pips, right? I only traveled about 70 pips between both of them, right? But I was able to really hone in 70% of that. So I hope that this trade setup here, breaks down the schematics that we look for and actually helps you out in your trading. So thank you, and see you again on the next trade.